Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 24th of September. All right, now one of those days where a bit of discombobulation again. We've got the US equity markets, not a bad day, up 1%. The Russell 2000 up there, 1.8%. But the bond yields, right, through the roof. Now, that would usually be associated with a down move in the equity markets. Now, we saw this the other day, right? When the Evergrande, the Chinese real estate fund came out, massive potential losses, over 300 billion or something. The equity markets were down 2%, right? And the treasuries also fell. So we had that one day of discombobulation. This looks like it's just flipped that day back over or corrected it somewhat, right? So we're sort of back to normal now. And this is where, you know, a little bit of patience, a lot of traders are getting sort of flushed out here, including me on the Aussie. But what it should come back to is the bond yields, right? These things here are up. The dollar should be rallying pretty much across the board. I think we've just seen a bit of a flush out with the rally in the equity markets, which is a risk on day. Okay, the dollar falls and the dollar block rallies. We saw a bit of that, right? But the overriding trend's got to come from interest rates, which is directly connected to the US bond yields, right? So they're up. I'm still confident, or slightly confident, with my short euro position, and that's where we are. So just to come into the end of the week, it's been a busy sort of period with a bit of, as I say, random geopolitical news with the Chinese news. There's been a few other things going on, but we have got some answers from the FOMC. Their plan is in place. They haven't given us an exact timeline for the tapering, but we saw how that was corrected with their forecast for higher rates in 2022. We do have Powell and also the Treasury's Janet Yellen, the last chair of the Fed, both talking today before the Senate Banking Committee. That's going to be quite interesting. Now, I can't see Powell's quite positive about what they're doing in their plan. Janet Yellen is probably the opposite, right? So I don't know how that's going to go. Maybe a situation where we balance or square up our positions leading into that release. Outside of that, we've got some to end the week, some good German iPhone numbers, right? This is a pretty good, like covers, excuse me, I got my tongue tied. I was going to say business and consumer confidence, basically, but business climate, this is a good historical number that it's usually released earlier in the week, right? The ZEW numbers or the zoo numbers and the iPhone numbers sort of go hand in hand. This is a good one to sort of gauge how are the Germans sort of finding things, right? And Germany is the crux of the Eurozone. So it is quite important. I'd like to see some weakness there because currently I am short euro. It would make sense if you do have a position in euro, come back and have a look at this release, which comes out at the start of the European session, because that could give you the answer to the next leg of the move. Okay, whether the euro, I'll just come over to the charts, whether the euro starts to sneak a little bit higher and take out a few stops above around 117.60, or whether if those numbers come in weak, then we should start to see it fall. As I said, the US Treasury yields are rallying. I know we had a risk on day as well, so that's the confusion. I can't see any other reason to be selling or buying sterling, Aussie and Kiwi. I know the Bank of England was out there yapping and talking about potential rate rises. But I think the UK's are way off. But anyway, that's the bit of a catalyst. As you can see, we are starting to see some of these other central banks come online, right? And they are telling us, you know, we're going to do this, we're going to do this. That's good because it gives the market direction. It now gives the economic data some sort of lifeline. Okay, if the numbers are strong, it goes towards their narrative of raising rates. So so that's interesting, right? So sterling really is going to come into the game, right? And that's probably one of the major reasons why Aussie and Kiwi sort of got a bit of a leg up. But you know what? It's going to be a bit of a battle with the dollar trend at the moment. Their plan is more concrete. It's more penciled in concrete. But we'll see how that plays out. Now, other than that, like euro to me is the trade to be on. It's very sticky here at the moment. If you're not in the trade, it might be worth waiting to see if it gets up to 117.80. But if it starts to dribble off, as I said, during the European session, then that may be where it's heading, right? The outside of that, you've got dollar CAD, oil's rallied again, dollar CAD's lower. Canadian retail sales figures were pretty crap. I think from looking at it, like a big downturn, you'd think the dollar would rally there, but it hasn't. Oil's in control of what dollar CAD's doing. When it comes to Aussie, I got short here, like looking for a bit of a range trade setup. The short-term momentum and that move in the equity markets really squeezed out that opportunity. See how it hasn't run very far? All it's done is taken out the short-term stop losses. So that's not a genuine up move. It's just a clean out once again. And you're just sort of wary of that. You want to make sure when if you're in a trade and you get flushed out, did you have it all completely wrong, or was it just the market squeezed you out? In this situation, I got squeezed out. Still on the euro. We'll see how that plays out. And for the rest of the time, there's not much else to be looking at. You've got if I just scroll down here, you've got the German IFO numbers. Yeah, you got the last of the home numbers or series of home numbers out of the US. Durable goods, that's next week. The main thing will be, if I can just get on that button there, is Fed Chairman Powell and Treasury's Janet Yellen speaking before the Senate committee. That could be a little bit of argy-bargy between the ex-Fed chair and the current Fed chair. It'd be interesting to see how they're getting on. From what Janet's saying, she doesn't really approve of what is going on, so we'll see how that plays out. Anyway, keep an eye on the US Treasuries, right? That's the key, I think, to the next leg of the dollar. You'd like to see the equity markets lining up with the Treasury moves, right? You don't want to see these things going up together or going down together. That means the market's confused, and that'll create a bit of sideways, loose volatility on the majors. All right. Anyway, that's where we are. All the best. Cheerio.